If a fund yields 35%, I assume they're giving away the farm, meaning they over-distribute and the price is probably trending down and to the right. This crypto ETF caught my attention because the price is actually rising and so is the income. For returns this good, there has to be significant risk, so today we'll look at how this fund generates these huge distributions, what kind of crypto assets it's currently holding, and most importantly, what's the catch? Hi from Central France. I'm back visiting my friend with the castle. If you want to see a little more of it, you can check out the last episode that I shot here back in May. Now, I'm no crypto expert, but here's the perspective from which I'm approaching this particular income fund. Number one, a large percentage of crypto companies will probably just go bankrupt. Number two, a small percentage will generate insane returns, which is already happening. Number three, I don't have the time or inclination to try and figure out which one is which. And number four, just like the internet, cell phones, and AI, crypto is not going away. When technology makes commerce more efficient, it tends to stick around. The distributions look great so far, but it's still early days. BLOX was born on June 16th, 2025. It's nice to see the distributions are trending up. That's because the value of the holdings are also trending up, and that's what the fund uses to generate the income. Also, note that the distributions are weekly. Most covered call funds pay monthly, but this weekly trend is starting to catch on. The short history throws off the yield formula most websites use, which is trailing 12 months of distributions divided by price. But if I take the most recent distribution of 17.43 cents, multiply it by 52 weeks and divide by today's price of $25.89, the yield annualizes to a whopping 35%. Snowball is handy for distribution charts like this, but I mostly use it to combine my stocks from 3 brokerages into one dashboard. I can rank by yield to see how I want to rebalance my portfolio, and the calendar function lets me see how many dollars will arrive on any given day of the month. Link in the description for a free trial and a discount. The Nicholas Crypto Income ETF uses options to produce distributions from crypto assets and companies that generate revenue from crypto. I wasn't familiar with the fund manager, Nicholas, until I came across the BLOX fund, or BLOX. They have 2 other funds, one focused on income and one focused on global stocks and funds. It's named after its founder, David Nicholas. We'll come back to him shortly. By the way, if you're new to the channel, I retired back in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%. Today's ETF is far more than that, but 8 to 12 is where they average out. If you'd like a copy of my portfolio, it's available via Armchair Insider. Link in the description. It's free. Let's take a look at the holdings currently in the portfolio. Of the roughly 100 holdings, only 17 are in the form of stocks and funds. There's a small amount of cash, 4%, and most of the holdings are options. The stocks and funds portion can be broken down into 3 funds and 14 stocks. About 20% of the fund is in these 2 Bitcoin ETFs and 10% roughly in an Ethereum ETF. The 14 stocks are related directly or indirectly to crypto. We won't go through all of them, but an example of directly would be Bitmine. The price of Bitmine is up almost 2,000% over the past year. Looking at the price chart, obviously something happened in late June of 2025. Previously, they were known as a Bitcoin mining company. 2 things changed, and that's what sent the price into the stratosphere. Number one, Tom Lee from Fundstrat took over as chairman. You may know him from CNBC. He's well known for being bullish on tech and crypto. Second thing, he announced that the company would shift its focus to acquiring Ethereum, a lot of Ethereum. Their goal is to acquire 5% of all the Ethereum, similar to what Michael Saylor did with Bitcoin at MicroStrategy. So what's the big deal with Ethereum all of a sudden? It's mostly because Wall Street is gearing up to trade assets on the blockchain. Jamie Dimon from JP Morgan, Larry Fink from BlackRock, and many Fortune 500 companies have gone from crypto skeptics to embracing the blockchain. They want to focus on stablecoins and tokenization of assets. Ethereum is the dominant layer upon which these technologies are built. The financial benefit is that these blockchain transactions increase the demand for Ethereum itself, which drives up the price, and each individual transaction generates fees for Ethereum holders, and that's called gas. Somewhere in the middle, there's Robinhood. They generate some of their revenue from good old-fashioned stock trading, but also a good chunk of their revenue from crypto trading. And then at the other end of the spectrum, we have Taiwan Semiconductor, which is not really a crypto company. They're famous for making high-end chips that go into products like the iPhone. The closest crypto link is that crypto miners do buy some chips from TSM, but that's a relatively small part of TSM's revenue. The major growth for TSM appears to be AI rather than crypto. Either way, BLOX investors aren't complaining because TSM is up almost 50% for the past year. Let's move on to how they use options to generate that income that we saw earlier. They have the latitude to use a lot of option strategies as listed in the summary prospectus. However, so far they focused on two strategies: selling call spreads on their crypto and selling put spreads on their equities. Now, these are complicated, and I was going to explain how each spread breaks down into two option trades, but it would make this video too long and frankly a little bit boring. So I cut that part out. Here are my notes. We'll press on, and I'll just show you this summary instead of those two major option strategies. Now, based on the interviews with David and Nicholas, their option strategies have a target annualized income of 50%, and they aim to distribute 36% annually. So they reinvest the 14% difference. Important to note that a 36% yield of a rising ETF price is fantastic, but if the price drops, so will those distributions. It looks like BLOX will be fairly tax efficient. In an interview, David Nicholas quoted an 80% return of capital as a tax treatment. On the return of capital portion, an investor wouldn't have to pay tax unless or until they sold, and it would lower their cost basis, and then when they sell, if they sell, they'd owe capital gains tax instead of income tax. The 19A1 statements also quote significant return of capital. However, these are just estimates, and the exact amount of return of capital won't be known until the fund completes its tax reporting after the close of the financial year. The expense ratio is 1.03%. That's slightly more than NEOS's 0.98% ratio on their Bitcoin fund, but less than YieldMax's 1.4% on their ULTY fund. It's in the range of what I'd expect for an actively managed covered call fund. Apart from what we've already covered, the huge yield, consistent distributions, and the appreciation so far, here's what I like about BLOX. There's plenty of upside to be had from the winners in the crypto space, as we've already seen. Trying to keep track of all these crypto investment opportunities and pick the winners looks to me to be a full-time job. And this is an easy way for an income investor to get diversified exposure to crypto with just one fund. Here are the risks and concerns I have about BLOX. A lot of this is new and untested. Aside from the fund itself being new, I would consider this option strategy new. At least I haven't seen this combination of call spreads and put spreads applied in this particular way. Then there's the fund manager, or technically the sub-advisor, Nicholas. They're new to the crypto space, and this is only their third ETF. Their primary business is financial advisory services, and fund management is a new business for them. They've partnered with Tidal, who acts as investment advisor, and Jay Pestrichelli is one of the portfolio managers for BLOX. Jay is most famous for his collaboration with the YieldMax funds and was a guest on this channel back in 2023. My understanding, based on interviews I watched with David Nicholas, is that Tidal handles the option trades and Nicholas handles the active management of the crypto portfolio, which brings us to my next concern. The driver of success for this fund is picking the right crypto stocks and funds, then actively managing that portfolio. So far, Nicholas has picked a lot of winners, and it's off to a great start. Given that they haven't been through a correction yet, I don't know if their returns are just fortunate timing, talent as a fund manager, or both. Crypto is a highly specialized and rapidly evolving technology, I appreciate that David Nicholas runs a successful wealth management firm, but I would like a better understanding of the crypto industry expertise that the fund has access to. There are 4 portfolio managers listed in the prospectus: David from Nicholas and 3 managers from Tidal. I couldn't find evidence of crypto expertise among those 4. Maybe they have crypto analysts that are not listed on the website. I don't know. The fund has done well because crypto is currently on fire. Apart from Bitmine's massive spike we saw earlier, the 6th largest holding, IREN, is up 580%, and Cypher Mining is up 270%. Those are mind-boggling numbers for a 1-year appreciation. Anything that goes up that much is just going to create a lot of wild volatility. Looking back at the BLOX price action, within the past month, there was a 1-day decline of 7.1% between October 21st and 22nd. And within the month, there was a 15% decline. That's during a month when the market is doing well. Imagine the volatility if the market takes a turn. You need a strong stomach to hold this ETF. I couldn't find much competition in the high-yield crypto fund space, but I expect more of it will come. Rex's crypto fund, CEPI, looks like this, so I didn't look any further into that one. YieldMax has LFGY, which offers a massive yield, currently 80%, but the price chart points the wrong way, that way. Here are all 3 expressed as total return going back to when BLOX was launched in June of 2025, and it's an impressive lead for BLOX. This analysis by Kevin Shan on Seeking Alpha goes into more detail about the performance of some key BLOX holdings and its somewhat complicated active management strategy. BLOX is so new that there are only 3 articles about it on Seeking Alpha at the moment. Kevin's was by far my favorite of the 3 and also the most recent. He published it on October 19th. So if you're a BLOX investor, I recommend reading that one. I'll link to his analysis in the description, and I'll put a link in there for a free trial and a discount. I don't buy or sell any funds without first checking Seeking Alpha. So I want to like this fund. It's exciting to find an investment that pays a high yield, appreciates in value, and provides diversified exposure within a really hot sector. But I'm not ready to pull the trigger on this one yet. I want to know more about their crypto strategy. How did they choose the stocks? Do they have crypto analysts that understand the fundamentals of these businesses? Are they using technical analysis to jump on momentum trades? I want to know why they have an edge. So still more research to do on this one, but it does have potential. So I thought I'd share with you what I've found so far in this episode. Now, if I come across new information that gives me the confidence to invest, I'll send out an update via Armchair Insider. Before I go, I mostly make videos about investments I like, but I do like some more than others. If you want to find videos of my favorites, click here for reviews that are focused on my top 10 holdings. That wraps it up for this look at BLOX. More Armchair Income coming soon. Armchair Income.